And we are beginning things today with a check on the cattle markets. July's mid-year estimate for U.S. cattle inventory showed a decrease at the national level, with beef-related inventory 1.3% lower than a year ago. The lowered beef numbers were the largest mid-year decrease in 9 years. University of Missouri livestock economist Scott Brown joined me this week to discuss what he is observing in the markets. We began our interview by talking about the sideways movement being seen with live cattle.
Well, I think you're right, Troy, when you describe it as a lot of sideways. And I think we continue to have a lot of folks who see that and go, yeah, box beef prices have continued to be much higher. Why aren't we seeing some higher live cattle prices? I guess for me, potentially as we move forward, the thing that I think is going to help us here is probably fewer supplies of market-ready cattle coming as we get into the latter part of 2021. I won't be surprised for us to start to see some better price strength than we have as numbers start to move down. That may not come soon enough for a lot of folks, but I still, get more optimistic as we look later this year and into early next.
Scott, what's your focus on this season's crop and how that plays into the feeder cattle market?
I guess for me, we're sure focused an awful lot on what's going to happen in terms of the crop this fall. To me, I think weather's gotten better in many parts of the corn growing regions of the U.S. That might translate into some warmer feeder cattle prices as we get later in the year. And I also then think the drought of the West and the Northern Plains may have got us where we're shipping some more feeder cattle to feed yards sooner than normal. And I think that has some implications. So I guess, again, I come there and I go, well, we could be more optimistic or have higher prices, as we start talking about trying to sell some of those spring-born calves.
And beef demand still looking strong. How do you think that'll play out heading into Labor Day in a few weeks?
Yeah, so I think we're in a part of the season where we are going to see some additional strength as we head towards Labor Day. We've really not seen any signs of beef demand weakening thus far in 2021. I still worry, if you think back to the very early part of COVID-19, we had a lot of concerns about the drag on the general economy. And we see none of that. Now, I think we have to remind ourselves that the opening of food service created a real pull that is waning. I don't say turned down, but we're not gonna need to fill that pipeline like we did when food service reopened. And so I'm watching some of those things right now, but generally demand for beef has continued to be strong.
Okay, Scott, so that's what we're seeing now. But then you look at the drought combined with reductions in herd numbers. What's the outlook?
Yeah, so I think the drought that we're currently experiencing in the West and I say Northern Plains, the Dakotas, Minnesota, et cetera, that's going to have some long-run implications. I think cattlemen are very focused on prices aren't so great today. And I keep saying, I hear you and I agree with that statement. However, don't lose sight of what potentially is coming here. I don't know, roughly 30% or so of the beef cow herd is setting in areas with drought concerns. That's certainly not as high as we were back in the 2012 drought, but significant. I think as those impacts continue to work their way through the system, which might be late 22, 2023, there's a chance for some much higher cattle prices. So I want to send the message of, yes, pay attention to what's happening today. I know that's what you have to live with, the reality of today, but don't lose sight of what might be coming as you plan, your size of operation going forward. There's a lot of places in this country where we aren't talking drought that I think are going to benefit from what's been a terrible situation in the western part of the U.S. and in the Dakotas in particular.
And real quick on beef exports, just looking really good. What more can you say?
Absolutely. I think, we have to remind ourselves that China matters here a lot in terms of what's been happening in beef exports. If you look at the combination of China, Hong Kong, Taiwan, year to date, we're up about 90% in beef exports to those places. However, I don't want to forget some of the traditional ones as we talk as well. South Korea has been really strong as well. I have them up about 30% year to date in terms of beef exports. To me, we don't want to set so many big issues going on that I think sometimes we forget. I keep saying the growth in demand for all meats, beef in particular, is certainly going to come probably outside the United States. And seeing these early signs of places like China increasing exports is nothing but a win for us long term.
All right, Scott, great information today. Let's end it with any marketing or risk management advice that you would like to mention that we haven't talked about.
Yeah, so I think generally in terms of risk management, as I look at cattle in particular, to me, there's a lot more maybe upside potential than downside risk right now. So I wouldn't get too wrapped up in a lot of risk management strategies trying to protect against lower prices. Of course, there are those big issues like we had an outbreak of FMD in this country that could be really terrible to cattle markets. But to me, there's a lot of positives right now. So I'm a little less worried about using dollars to do risk protection right now. To me, the drought is just going to be the bigger, longer term story that we get to face. And so I'm a little less worried about that risk protection right now than maybe in the past. If you're going to do it, sometimes I go looking at the USDA LRP product, for example, might be a good alternative to get something relatively inexpensive to protect maybe some of that lowest downside risk.